Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market tested and found sellers at yesterday's broken initial support zone. And then on the downside, buyers were active and held ES above the 2785 high volume node. At this point, heading into the open, our short-term and intermediate-term bias is going to be neutral, which means that we are going to have to see how the market develops in real time to determine which side is in control. On the upside, we have the initial resistance zone at 2798 to 2800, and a breakout above that area would signal short-term strength. So on the upside, how the market responds to the 2798 to 2800 zone is going to provide us a pretty good indication of which side is being dominant on the smaller time frame. On the downside, we have the initial support zone at 83 to 85 half, and holding above that area would signal some level of stability in the markets, and a break below that area would signal continued weakness and bring the support areas below into play. Now, given the large move that we saw yesterday, the higher odds scenario is for the market to consolidate and balance within a range. Now, if the real-time situation is looking bullish and we get a breakout above initial resistance, then the market can hit 2808 to 2810, maybe 2812, and then it can start consolidating and balancing within a range. And in the event that the real-time situation is looking bearish and we get a failure at the initial resistance zone, then the market can balance at lower prices. But typically, after we get a big directional move like yesterday, the following day the market consolidates and balances within a range. That doesn't mean that the market has to chop around today, but that's usually what takes place. And as long as the real-time situation is not showing us excess strength or excess weakness and big and sustained momentum in one direction, then the balancing or consolidation type scenario can play out.